Hello and welcome to the Buck Stops here. I'm Catherine Murray. Well, the price of crude oil, WTI, just hit a 7-year high. It's probably one of the biggest stories out there right now. And whether you've participated in the energy sector rally or looking to get some investment exposure or simply feeling the inflationary effects of higher oil and gas prices and really sitting here wondering, where do we go from here? Will these higher prices be transitory, or are we at the beginning of a commodity super cycle? Let's get some perspective right now from someone who called this run-up well over 18 months ago and positioned his energy funds to benefit with his Canoe Alpha Fund up by 88% or 80%, I should say. Rafi Tahmazian joins us now. He's a senior PM at Canoe Financial. Rafi, great to catch up with you and get your perspective once again. So thanks for joining us.
Thank you for having me on. Appreciate it, Catherine.
Thanks. And Rafi, full disclosure, I am an investor in your fund, so I'm participating in this. I'm well acquainted with the story, your story in particular, because you really did see this run up well ahead of the street catching on to it. So why don't we kind of just step back a little bit, big picture, in terms of how we got here, because nobody thought we'd see energy with a 7 handle on it, WTI, that is.
Yeah, well, good on you. I guess you've been interviewing me for several years, and you've kind of seen our transition as well. And so maybe just listening to us over and over, you realize the importance in investing, because really what we've been trying to tell people from 2015 to 2019 was we are attacking the wrong thing. We're attacking supply, and you need to attack the consumer. If you do not attack the consumer, then you really leave yourself unchecked. And
wait, Rafi, I got to stop you there. People don't necessarily know what you mean.
Well, okay, there's an anti-energy movement, and specifically, there's a movement against hydrocarbons because of a fear that is being worked over around climate change. And so the enemy was chosen to be the producer, but there was complete disregard for the actual what we were using it for, the person consuming oil. And further than that is there was a focus on what the oil we were using in the developed world, and there was a complete lack of explanation around why oil is needed in the undeveloped world. And it's a matter of life and death there. It's a matter of healthcare and whether you're going to not just have a cold shower, but without the power, you die. And that none of that was really understood. And instead, we attacked the production, the oil companies, if you will, and we neglected our addiction to using the oil. So now we've left ourselves spending 5-6 years directing capital away from the infrastructure of oil and supply, and increasing our actual demand for it, and that's created the crisis. And we've warned about this for several years, and it fell on deaf ears. So when it came time that the proverbial supply and demand lines crossed, we just, as you said, positioned our capital in front of that deficit, and we're making a bunch of money for clients doing that.
Yeah, right. I mean, it's very difficult for the consumer, and it's almost, invest in energy because it's a hedge against the bills you're going to be paying. That's a whole other topic, and we're going to get to some investment ideas. But I also want to bring up a point that you've talked about, which is when we saw the pullback in North American production, or Canada at least, in terms of the vilification, we really transferred the security risk of the energy portfolios to some dissident nations. I only have about 30 seconds, but what's your one-liner on that?
Yeah, so basically, the easy oil producer to attack is the independent producer because they're not colluding. The OPEC is a collusion of countries and their production to try to manipulate supply to better their price. The North American oil companies can't act that way, so they act independently. That makes them vulnerable, and so the anti-energy movement attacked them, and now Canadian and U.S. oil is no longer a threat to supply, and it is the asset that was removed from the system to create this drafted pricing now.
All right, Rafi, we're going to leave it there. We'll pick it up when we return.
You bet.
All right, we are back with Rafi Tahmazian as we take a look at the energy sector, which has rallied so significantly, I think, surprising a lot of people. Rafi, I want to pick up, though, on whether or not what we're seeing right now in terms of higher oil prices will be transitory, which is what the U.S. Federal Reserve has suggested, or whether or not we really are at the beginning of a new super cycle. So, because we've talked about the supply side, which has been destructed over the past number of years. But one question there, at what point can the shale players in the United States pick up some of that slack, number one? And number two, of course, the demand side of the equation, and in particular, the developed nation, 1 billion people wanting to move out of poverty. Those factors will also impact the outlook. Yeah.
So, I think that supply chain and is going to be, by the way, I'm an economist by background, and I've never heard of the word transitory. So it's unprecedented for me. I don't even know what that is. I never studied it. Temporary inflation. I think the question is more, I fear more, are we in an inflationary environment or are we in a stagflation environment? And that's going to make the difference between capital transitioning from growth and tech seamlessly into value and cyclicals versus the whole thing crumbling down. And that's what I'm more focused on. I don't know whether we should be curious about trend. I don't know how you can tell whether we have inflation when you have this supply chain issue. You can't even bid on a good today to tell whether there's inflation because you don't know when the good is even going to arrive to you. So the chip issue, the supply chain issue are distorting our ability to understand whether we have inflation. And that is just a risk. It's a risk whether it is or not. And you have no choice what to do about that. But regardless, what we're finding is the appetite for energy globally is growing so immensely, both in the developed and the undeveloped world now. The attitude that we had pre-COVID was, move inner city, ride sharing, subway usage. Now it's the opposite. We're moving out. Everybody wants to take care of themselves. They want to look after themselves. No one wants to go grocery shopping. Instead, they want each of the individual items delivered to their door in its own individual package. All of this stuff, this selfishness, which is we've moved from selflessness to selfishness in a way that we're protecting ourselves and our health individually, is elevating the amount of demand for oil we're finding. And that's happening globally.
And so what do you think will be the result as it relates to the uptick that we've seen in the price of WTI and also, of course, the stocks? Actually, before we even get to that, because we're going to talk about stocks later, but you used the word earlier, an energy crisis. It's pretty interesting to use those words. The last time you think of that would be in the 70s, and we're seeing it kind of play out in the UK and the EU. Describe to us maybe first, how did that happen?
Yeah, I think there's two crises happening. There's one in the developed world, which is a lack of the product to provide for basic travel and needs, and even to a certain degree heating. In the developing world, it goes even deeper. It goes into healthcare and life and survival, and both of them are situations where it happened because we attacked the short-term supply with North American oil, and we attacked the longer-term supply with the super majors starting 6-7 years ago. And those super majors reduced their spending by almost 60% over that period of time. And that infrastructure of 80 some odd million barrels of production that they were really responsible for maintaining has not been really maintained properly enough. And people just think we turn on a tap and we produce. It requires enormous amounts of capital. And I would even say that these OPEC nations that are supposed to be, we're all waiting for them to come back and show us all this oil when we need it. They're even panicking now because low oil prices meant they were not spending money on their own infrastructure. And that means that even their throughput that they claim they have is in jeopardy. And so for them to be saying they're going to be adding 400,000 barrels here right away, and then they're not going to look at it again for a while, they didn't raise production likely because they can't. And they've got to spend money on their fields, on their infrastructure to make sure they can have that capacity available. Okay. Because as soon as OPEC doesn't have the capacity, then we are in a free fall, or let's say a free rise up.
And we are back with Rafi Tahmazian. Rafi, you were just commenting about the fact that given we had low oil prices for so long, the big majors didn't invest in their infrastructure, didn't put the capital to work. That, again, is the supply side. But there's a really important demand side of the equation that you say doesn't actually get calculated. And again, we're going to go back to the developing nations and the poverty. Walk us through what isn't being calculated and therefore where you think oil prices can really go.
Yeah, touched on it a few times there, but what's important for people to understand is, number one, the population of the world keeps growing and at an accelerated pace in the developing world. And that's where we're still trying to move people out of poverty and into the middle class, if you will. It takes an enormous amount of energy to move people out of poverty. And then what is really not understood yet is it amplifies our demand for oil then, because now let's say in the next decade or 15 years, we move 1 billion people out of poverty. That's 1 billion people now that have even more appetite for energy, because in poverty, you don't use energy as much. But when you're out of poverty, now you want central heating and you want plumbing and you want a vehicle and you want to build a house and you want healthcare, accelerated amount of healthcare. And all of these things, we have not been able to offer people an alternative other than oil to achieve those things. You want to get rid of oil, you need to find a good alternative. I've used that example of Kodak film before with you, where why does Kodak film not exist anymore? Because we seamlessly got rid of it through a very effective alternative, digital cameras.
So
we have not attacked oil the same way.
So let me ask you this. Do you think that there will be an alternative? Because obviously the people who are against oil do believe that the renewables will suffice that. But then you take a look at what's going on in the UK and the EU. How is it that they arrived at an energy crisis?
Yeah, until they're too expensive, they're hard to store, and they can't be transported, and they're inconsistent. So it's a variable energy source. It's not an alternative and it's not a renewable. It's a variable energy source. And until we can figure out and we're spending time and money investing in ways to store some of that power ourselves too. We see technologies that are trying to do that. Even that is not going to have remotely the impact. People need to accept hydrocarbons will be part of our lives for a long time to come. And we have to marry the two together. But it's just, in fact, we should be spending a lot more time and money on cleaning up the emissions of hydrocarbons instead of trying to get rid of them, because it's just an unrealistic expectation to think we can just, be without hydrocarbons. In this energy cycle and the next, you will not see any material impact of alternative energy, I think.
So where does that leave you in terms of looking at the energy sector right now and where you want to be weighted, whether it's oil or gas even?
Yeah, that's a good question, actually, Catherine. You have to treat both commodities separately, and you have to invest in them separately. We, as you know, invest in the industry with we look at it like 9 subsectors, the entire energy industry. And they all trade off against each other at different times. We were aggressively pursuing the gas market in the spring of last year after COVID hit. And only until recently did we actually back into this excitement and this carelessness around the price of gas, did we start to sell that position down. And to your point earlier, now we're going to see probably this energy crisis get to the point where the anti-movement against North American oil production might reverse. And we might see people saying, hey, we want to exploit our own energy. And you might see where we will start to turn around and expand our capital programs and try to expand the production back in North America, maybe even in this cycle. I will tell you, if we do expand our capital programs, there is no services capable of doing that yet. So we've taken that gas position down and we've moved aggressively into the energy service sector across the board, primarily in the pumpers and the frackers, but across the board, really, you could do it. We see just the sector's been, in Canada, certainly has been left to die for 5-6 years. So there's just not the infrastructure capable. So any amount of spending by the producers means you're going to see increased day rates in the service sector, and you'll benefit from that greatly.
We're going to pick it up right after the break. All right, we are back with Rafi Tahmazian. Rafi, I want all of us to really understand why the UK and the EU, I'm going back to this again, is in a crisis mode, because we don't want that in America or Canada, North America. What happened?
Well, we're very energy rich in Canada and the US, and so we are exporting our products. The UK and the EU are not energy rich, and they need to get product from others, and they don't want to get it from Russia. And so they have been trying to create and build out this energy source. I had an energy friend of mine visiting from the UK this week. She's a two-decade-long investor. She's embarrassed to say that she's an energy investor. When she's back home, she'll get vilified or paint thrown on her. So there's this anti-energy movement, and that's fine. But they chose to build out this variable energy source. And when that variable energy stopped, which it did, it stopped blowing effectively.
The wind farms.
The wind farms. They had to rely on these more regular sources, but they had been neglecting that infrastructure for so long. And now there's a realization that, again, that earlier in our show when we talked about don't attack the supply, try to kill your demand, they've grown their demand and they killed their supply, and they've got themselves in this problem.
So let me ask you this. The bears on oil would say the U.S. shale players can turn the taps back on. You kind of say no, or can they? And if so, how long would it take?
On the oil side, let's just run through that real quickly. If you want to change and add your production, you've got to create a capital program first. Then you got to go to your board and get it approved. Then the board has to approve it and pass it back to the management. Management has to procure assets. Then they've got to drill the well, complete it, test it, bring it online, and flow it. We're talking about a year before we even see that result. So it's just ludicrous. But the companies have already announced and have in fact implemented distributions with this free cash flow. And so for them to even reverse that, they've got to announce it to the public, or else they'll end up with a bunch of lawsuits. You can't say something and not do it.
Right.
So they put it in print.
You can't say you're going to take your cash, will pay a dividend, and then not pay the dividend. Having said that, we've only got about 2 minutes left. I do want to get just a couple of names from you real quick. And then I've got one final question.
Yeah, I think I would stick to very large liquid names. You don't have to go into a lot of risk today. The differentials between the risky names and the non-risky names is very small. So stick to flight to quality and risk, low risk. Cenovus is a great way to play the oil play, delevering very fast. On the service side, I would look at Trican as your premier pumper and service name in Canada. A junior maybe oil name to look at would be something called Headwater, which is a company we followed from its inception when they acquired the Clearwater asset from Cenovus. And that Clearwater asset is an exceptional economics. These wells pay out. There's no pumper required, no fracking. So these wells pay out in less than 3 months,
Okay.
versus 18 months to 2 years in your Montney and Duvernay wells. So your line of sight to profitability is very quick. So I would look at those three as a good starting point: Cenovus, Trican, and Headwater.
Got it. And just lastly, 30 seconds here, Rafi. The bear case, perhaps on energy, could be the China large property developer Evergrande. If that is not ring-fenced and there are more of those, presumably that would weigh on global demand, period, on so many fronts.
Take it up higher a notch, and maybe just say that the downside for my sector is if we can attack the demand somehow. We're not going to be alleviating the pressure of our lack of supply shortly. You can't do that. But if we can eliminate the demand pressure, which we just don't see how we can arrest that short of a massive global economic slowdown.
Okay.
Something similar to what happened in March of 2020 with COVID.
Got it. So how long does this last, this super cycle?
Yeah. On the oil side, you're probably looking at 3 to 5 years.
Okay.
And on the gas side, I think we can alleviate this problem actually quite quickly. So I think you'll see a lot less pressure on gas by the spring of this year.
Got it. Got to leave it there. Rafi, great to see you. Thank you.
All right. Take care.
Thanks.
Bye-bye.
Thank you so much for watching. I am Catherine Murray. We'll see you next time on The Buck Stops Here.